Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our monthly stock market analysis for the close of June 30th, 2020. We've entitled this month's video Back and Forth after the mid-80s group Cameo had a wonderful song, one of my favorite songs. Ironically, it also describes the market action that we've seen over the last several weeks, and specifically in all of month of June. We've seen this back and forth action between the bulls and the bears with a lot of indecision. However, on some of the indices, we've seen some very aggressive movements, almost parabolic as we call it, and that's specifically on the Nasdaq that saw a great return for all of June, but then for all of 2020 is still very positive in regards to its overall return, with the Nasdaq coming in at just above 6.5% up in price over this period, which is very strong in correlation to our overall S&P, which was only up just 1.5%. And at the same time, we've seen a pretty large range of expansion, and we'll dig into that in the charts in a moment. But the goal of this overall expansion is to find viable prices both from a sell side and a buy side. So the market has been in clear discovery mode. However, there is a significant amount of indecision, but there still is a very positive ascent to the overall market despite a number of major economic pieces of information that really should have the market much lower than where it is. However, there's been a lot of engagement from the Federal Reserve as well as retail traders such as you and I stepping in to help keep things afloat, and the US government has been able to provide a little bit of relief to some of our US based companies that has given a little bit more of a cushion and comfort to try to stabilize the overall market. Will this continue into the month of June as we close out not only the month of June, but then also the quarter and the midpoint of the year? So this could lead to some potential volatility given what we'll show on the next few slides on how the market has been just moving back and forth over the last few weeks with an upward skew. But will that come to a close as we step into the holiday season in the US for July 4th? So we'll take a look, and as always, we will start off with the S&P 500. As always, we will start off our monthly review with the S&P 500 monthly charts. And as you can see, we have closed the month positive, and that was a mystery on if that was going to come to fruition given the large sell-offs that we saw this past week and going into the end of the week. However, the market has rebounded coming into the front side of the last 2 weeks of the month and has showcased that the bulls are still in somewhat control. However, is there something that could last as we move forward? Now, one thing we do want to kind of call attention to is on the monthly, we have seen price really go from a discovery perspective and actually dip down into value area. And those that are new, our value area is described as these barriers that we'll draw out in yellow to kind of identify, well, where has the majority of the volume over a time period really taken place? And if price moves back inside of value and then moves back outside of value, that is a very strong bullish perspective and something that we do want to monitor moving forward. So as we closed out the month, it does send a clear signal for the longer term institutional traders to see that there still is strength in the market to move prices higher. Now, will that momentum continue to change and push higher despite all the sell-offs and despite all of the uncertainty that the market has in regards to coronavirus as well as potential layoffs and unemployment here in the United States? There's just stacking so many negative things. Can the bulls continue to keep things afloat moving forward? However, this is still a buy signal, not only for the longer term traders that really only make decisions a few times a year, primarily the larger institutions. This still is a buy signal for them, but at the same time, it also is a buy signal for our weekly traders. If we drop down our period, we still have a strong bullish identification on the weekly chart as well, as you can see, we've had some very tight consolidation over the last 3 weeks. And what this does showcase to us is that there is a lot of energy that is compressed, and there is something that's going to happen, albeit resolving to the upside or resolving to the downside. And that is a little bit of an uncertainty that we will have to just wait for it to unfold. However, over these last 3 weeks, we have seen very aggressive buying at the price level of roughly about $300 mark. Now, the market does like very round numbers in regards to prices of moving to acceptance or moving to rejection, meaning 100, 150, 200, 250, very visual references. And ironically, over this 1 year period on the weekly chart, we've seen that consolidation has taken place around that $300 mark around the last 3 weeks. But then also, if we extend that lens out to just outside of the month range, we can see very much compression of price in a very strong trading range. If you can't pick a direction on where the market is going very visually, excuse me, it is in a trading range. And the market moves from very aggressive moves to what we call balance moves, which is going horizontal. So moving from a period of excess to a period of balance. And then there is the possibility of resolving some way to the upside if we kind of have this continuation of a bullish nature, but at the same time, there's equal probability for us to kind of resolve to the downside. Now, something will happen, but all to be in regards to direction, it's a little bit uncertain as we continue to move forward within the month. Our hypothesis is that this is probably an opportunity for the bulls to take some profits and potentially resolving back to the downside. But we will wait and see how things unfold. But I would caution everyone, this is probably an opportunity to potentially take some profits. I'm not going to make a full bearish call at this moment. Now, we will see how this week closes out. Given that the month close was toward the front side of the week, there could be some additional information that comes out toward the latter part of the week, which could give a little bit more of a catalyst to push us just that much downward. Now, if you are looking at, are the current prices fair or not fair, the point of control is where the most volume takes place. And then where the most volume takes place is typically a balance area where it's fair for both the buyers and the sellers. So if you are looking to step in, this is a relatively good price. Obviously not a trade recommendation, but at the same time, this is an opportunity to really do some discovery and look for those opportunities if there is an opportunity for resolution to the upside to kind of continue this strong bullish move that we have. Now, it is a tough call to make because it equally can go upward or downward, right? So we definitely just want to kind of watch that, and it's very consistent across the board for some of the other indices. Now, if we move on to the Nasdaq, which has been the golden child, it's hard to pick a favorite child, so to speak, but the Nasdaq has been that potential. As you can see, we have seen very strong movement, not only just within the month of March, but at the same time, the last 3 months, we've seen some very strong consolidation and pushing upward, where we've seen higher highs as well as higher lows, which is a clear indication of a bullish movement. Now, this is uncharted territory, and we did make a new all-time high in the Nasdaq, coming in at 251.15. Now, this is the target number for the bulls to really push hard over the next few weeks to try to continue to get to that level. And ironically, we're very much close to that just in the price action over the first 2 days of the last week of June. Now, there also here is a little bit of consolidation in price where we could have some resolution to the upside. We've seen this before where, just as we stated on the S&P, where we move from excess, a trend, a very visual trend, to an area of balance where there is indecision in regards to what is going to happen next. Now, if we did compare what we've seen in the Nasdaq versus other indices, the probability of a rotation upward where we get higher than this 251 area, that could be a clear bullish signal to kind of double up, if you will, to that next location, which would be roughly that 250, kind of 275 type area where we would see some potential selling coming across. Now, that is a hypothesis that typically, if you have some balance, you can kind of double that range, which would put you up anywhere between that 265, 270 level as we shared. Now, that's 50-50. However, we want to continue to follow the trend. Typically, trends will kind of maintain themselves unless there is some type of catalyst to resolve back to the downside. But on the weekly chart, the Nasdaq is very much overpriced and overextended, but that does not mean that there will be a huge sell-off to kind of push us back into this value range. And you can see how far we are away from the fairest price, coming in at roughly 192.50. So there could be some potential to kind of resolve back downward. Now, if that does happen, we will watch to see if we can break below this week's low, which would begin to kind of curve and round off the momentum, and we kind of see a little bit of a balancing, as we stated, that this could be a rolling down forward. So we'll watch this as we move forward. I am sideways to bearish. That's a slight bearish. I do not want to call a full bearish mode at this point. And as I say that, watch the market just kind of sell off over the next few weeks or so. But we just adjust and only can make recommendations and ideas for your own portfolio. That's what you really have to make a decision on. At the same time, we can only report what we see and then make decisions as the market unfolds. We don't want to make decisions on activities that we want to see, and that's a key thing for any type of investment. So if we step on to the Russell, which has seen some pretty good action, let's move back to the monthly chart. As you can see, the Russell has been very strong coming off of the lows from the coronavirus going back into the latter part of March, and we've seen a very strong upward bullish trend, and actually came up and touched the point of control and then reversed right back down. So this could mean a little bit more of a sideways action, as we've seen with the other indices. This could be an opportunity for some type of consolidation and creating a base for another leg or another second move upward. But we still are very positive, and the bulls do see this close of June as a green candle, which could indicate continuation and follow through into the July period as well. So if we shift over to the weekly, you can kind of see where we've kind of pulled off coming off that point of control over the last 4 weeks or so, where we've just kind of moved downward, where we've seen lower highs and lower lows. But just in the last 2 weeks, that trend, as we've moved off of that 20 period moving average, a little bit of an upward skew. So we'll watch this, but we still are within a value range, so prices still are fair. Now, what we do want to watch for the Russell, which is 2,000 stocks that are US based, is there an opportunity to have some continuation and break out above the high of last week? So we're very, very close in that regard. So we do want to watch this candle. If this week can continue to move upward and close above, this would indicate a continuation of this bullish angle of ascent. So we want to watch that as US Congress continues to provide a little bit more stability to US businesses in regards to the Payment Protection Act, and trying to stabilize this overall market and give more confidence to US consumers, despite so much negative news economically as well as health-wise, with the coronavirus still impacting a number of individuals. So if you don't have a mask, please continue to wear a mask. This is very much serious. Now I'll get off my political soapbox, but this is a situation that is life and death. So especially for those that are in some of the hot spot states across the country. So we'll kind of conclude out with our look at gold. Gold has been on a tear upward month over month over month, and we still continue to hold. Full disclosure, we do continue to hold long gold, and we will continue to hold long gold because we still feel we are bullish and we are coming up to an area of potential resistance, but we do feel that this price will continue to resolve upside, as we've seen month over month, we have seen higher highs as well as higher lows, which clearly indicates a positive skew to the upside. As we shift over to the weekly chart, you can see a little bit more where there could be some potential resistance area coming through at roughly that $170 amount level, but we do want to kind of watch that as we have poked up before and have resolved to some degree back down to the downside. So this longer term trend line going back into 2019 is still fully intact, and you can kind of see it a little bit where we have just come just below that trend line and have pulled back. Now still bullish, and we still don't want to make any bearish type activity changes, but this could be again an opportunity for some consolidation. So for gold, we are still bullish to sideways movement for the month of July. Now at the same time, if there are any additional volatility actions that are seen on the S&P and the broader indices, gold is seen as a hedge. For those that are new, we typically reiterate that. And what that could mean with gold will just resolve to the upside. But we do have very strong base support coming in at that 164 level area. So if gold does try to resolve back down to the downside, you have some pretty good support roughly here at that $165 amount level. So we'll watch gold and continue to take a look at that. And just to round out our overall indices, we'll take a look at the Dow. We don't trade the Dow. That's just our personal preference. However, many of our followers and our clients do. So we thank you for the feedback and your perspective. So we do want to kind of ensure that we do a equal analysis across the board for all of our indices. So we'll take a look at the Dow on the monthly. You can see again, very bullish coming off of our coronavirus lows, and we still see higher highs and higher lows, and that is a clear indication of continuation. However, from a monthly perspective, you can see that we poked outside of value from a price perspective, but then came back in, and you've seen that huge sell-off over the last few weeks to give us an indication that the bullish momentum may be coming to a close, or at least slowing down. And you can kind of see that if we look on the weekly charts. Certainly a grand review of sideways consolidation, and we've seen this a number of times, and this is an opportunity for us to really dig in to understand, well, why does the market do what it does? And that's something that is unknown to a lot, but the market leaves clues, and it's our job is to really kind of put these clues together to come up with a hypothesis. But as you can see, over the last 3 weeks, there's been a lot of compression on the Dow, very similar to what we saw in the S&P, and that has to be resolved at some point, albeit to the upside or to the downside. And that's something that is going to be something that we will watch very aggressively. And as we want you to be cautious, we want you to be informed, and we also want you to not necessarily chase any type of investment that you are unfamiliar with. We've seen a number of stories over the last month where individuals were making purchases of assets or asset classes and not understanding how things work, and it's ended in very tragic type actions. So please ask questions, leave comments. It's my job, and our job as our company is to provide the information as easily and as consumable as possible. And with that, we're going to close out and try to keep this video short as best as we can. As always, it's your money and it should be under your control. Thank you. Take care.